following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block, and I hope all of our listeners out there are having a fun and indeed a profitable and safe, given this environment, trading week. My name is Mark Longo from theoptionsinsider.com, as well as most of the shows here on the old Options Insider Radio Network, and I am back in the hosting seat after a brief sojourn to the East Coast. And good old Mark Sebastian, you filled in admirably for me, sir. So thank you for doing that.
Well, I appreciate that. That's really nice of you to say.
I feel now that I can travel abroad, and between you and Tusaw, we have a good back catalog of hosts to fill the big chair when I'm gone. But it's fun, isn't it, to have to make sure there's no dead air and all the other fun stuff that goes along with hosting the show.
Dead air has never really been an issue of mine, Mark. I don't know if you've noticed
That's
that.
True.
But
that's true.
Yeah, it was my biggest struggle was trying to let the other people talk. But it was a lot of fun. I enjoyed doing it. It was like doing the show without you is kind of like going to see the Chicago Bears and Staley, the Bear mascot, not being there. It's just disappointing. It's like going to a monster truck rally and not having Truckosaurus there.
That's a little better than being the Bear mascot. I thank you for that.
Yeah, much better. So
yeah, I don't get it. Cusick comes on the show twice, both times when I'm gone. He must have some long-standing grudge against me that I'm not aware of.
I mean, that
you didn't call him Joan, did you?
No, but that comment about the Snork and the Smurf and Hulk Hogan was just really inappropriate.
Yeah, that was probably over the top. And I'm now just ensured that he'll never come back when I'm on the show again. So. And of course, listeners, that other voice is indeed the man from the mountains, Uncle Mike Tusaw, who also missed the last show, and he was filled in admirably for by Auntie/Grandpa Mike Kavanaugh. So, Uncle Mike, welcome back to the program, sir.
Always good to be here.
And you are out in the satellite office today, I believe.
I am. We're out in the mountains of St. Charles, Illinois.
A fine, fine place for wrestling bears and catching salmon with your bare hands.
That is true. And the sharks don't bite too much in the Fox River, which is a good thing.
Yeah. And then last but not least, holding down the Options Express hot seat today is good old Tim Navabi, the trading specialist extraordinaire from Options Express. Tim, welcome back to the show as well.
Hi, how are you, Mark? How you doing?
I'm good. I'm good. I'm just back from a trip to the old Futures Industry Association / Options Industry Council joint conference there in New York City. And as you might expect, listeners, that is a very, very industry-heavy show. And yet, whenever I go to these conferences, I'm always pulled aside by people who would just routinely profess their admiration and their appreciation for the shows we do on the network. And quite a few of them express a love for this program, which I think is interesting because we typically aim this show at the active retail audience, and yet we have quite a few industry listeners out there. So our reach is broad and vast. Of course, there's no accounting for taste because a lot of these people also said they like my voice, and I can't stand the sound of my voice. So maybe that calls their opinion into question a little bit. I don't know.
I don't know. That you've got kind of like a Barry White kind of thing.
Barry White et al.
You've got the deep, soulful, smooth jazz cover. Like I almost wish we had like a Kenny G sound kind of going off in the background when you were doing the introduction to the option block.
Welcome.
I think that'd
option
be pretty
block.
Awesome.
Sit back with your lady and enjoy the option block.
Yeah, exactly. With like a little bit of jazz saxophone and Mike Tusaw on the jazz flute, which is I don't know if you know that, but when he wasn't playing football, Mike played the jazz flute. It was one of his favorite things to mess around with.
He plays a mean jazz flute, that Tusaw.
Kept the flute in the locker, yeah.
Yeah.
At the halftime, I didn't go into the halftime. I went out and played with the band. I was the flautist.
And of course Tim Navabi on the snare drum, which he's famous for. Doesn't just snare ladies, he snares drums.
He snares all manner of things. And of course, one of these silly folks at the conference the other day did even call me the voice of options. I may have to add that to my business card going forward. And I can sell my voice for voicemails around the country for a modest fee.
Very good.
I'll pay you $5 to go on my voicemail.
Silence. Bring, bring.
Hello, you've reached the option block. Sit back with your lady, crack open a nice Colt 45, and enjoy our unique brand of options, information, and entertainment.
And leave a message after the beep.
Oh, yes,
right?
and leave a message.
You forgot that part.
That's incidental to the overall experience. All right, and with this increasingly absurd banter block drawing to a close, we're going to roll right into the trading block.
The trading block.
And welcome to the trading block. This is indeed the portion of the show where we discuss what's moving the markets today, and it was another strong day to the upside. Most of the broad indices closed up. S&P closed up about 20 handles to 1209.11. The Dow closed up 186 to 11,433. The Nasdaq closed up 34.5 to 2607, and the good old VIX cash inexorably moving south, down 2.63 points to 31.97. So it's getting close, Mr. Sebastian, getting close to that south of the 30 handle. Hasn't gotten there yet, but it's getting close.
Well, you know what's interesting is actually for a second there, I was looking at the VIX term structure, and we're now in a case. It's really interesting. Yes, cash is over. If you look at kind of VIX, the cash market is definitely under September, but September is also kind of under October, but then, it was kind of weird. So you had cash under Sep under OCC, and then OCC way over November, and November actually over September. So we've got a really weird term structure right now. And it's a little screwy. The VIX Sep futures closed around 33, so a buck in contango. The OCC closed 32.70, so they're basically flat with each other. And then the NOV actually closed below the OCC, so it's really weird. We've got kind of like this peak where based on kind of option prices or based on VIX futures prices, it looks like they're expecting things to settle either very early next week or kind of beginning of October, kind of the beginning of the October settlement month. That's kind of where they're kind of pricing things out. And then because from then on, things actually start to really die out. Everything kind of flattens up and stops. So I think we've got a real good shot at, I don't know if we break 30 this week, but I think it happens sometime next week.
You think that quick? You think it looks like they're pricing in, because I was looking at the futures earlier today, it looks like they were pricing in, a little bit of vacillation in the near term, but probably holding these levels, and then the, inevitable slow sell-off, like you said, into November and going into the end of the year. I mean, people have been leaning to the downside in VIX and the long-term futures for a while, and it looks like we're finally starting to have the cash follow suit.
And while we're talking, it looks like RIM just announced Q2 EPS 80 versus consensus 87.
Oh, yeah, looking strong for them.
4.2 billion in sales, consensus 4.47, sees Q3 $1.20 to $1.40, sales of 5.3, 5.6. So it looks like they missed everything again. And of course, it's off $3.
Yeah, it's off $3 in the after hours.
Glad I bought a put spread.
I was just talking with someone the other day at the conference, actually, who was working with a lot of financial advisors in Canada, actually, and they're lamenting how so many of their Canadian clients, especially the high net worth clients in Canada, are so heavy still in RIM because it was such a strong, nationalistic buy. It was one of the few local tech names out there. They're all just loaded up in RIM, and so many of the advisors up there are completely inept in terms of hedging or using options, just like they are in the States in most cases. So these high net worth Canadian clients are just riding RIM all the way down on this long extended downturn. I don't know, quite frankly, I don't see much upside for RIM in the near future.
They're gonna. Maybe RIM and Yahoo should merge.
Yeah, they could ride to zero together.
Worst company in the world.
At a certain point, there has to be a floor to RIM, because at a certain point they have patents, and everyone and their mother wants patents. Just look at Kodak; they're another name that's been circling the bowl for a while, but they won't go away for that precise reason is patent. And look at their $3 stock. The at the money straddle October right now is trading over $1. Because they're factoring in a potential bump up from someone picking them up for patents. And I'd imagine, I don't know what that price level is for RIM, probably somewhere in the teens or lower, but there is a certain floor at which someone, Apple's got $80 billion in cash. They could write a check for RIM at this point and not even dent that amount. So someone will come in and gobble up these patents at a certain point, but you have to kind of pick your levels on where that point is. I don't think it's 26.5, which is where it's trading in the after hours right now, down $3.
Yeah, this is going to be an ugly one for RIM over the next couple of days.
Well, just to show you how out of touch RIM is, they made that BlackBerry Playbook, that tablet, a few months ago, and they launched it without any native calendar or email client or anything else. You had to essentially have a BlackBerry and hook it up to do any of those things. So if you bought that tablet on its own, you couldn't do even basic things like check your email or your calendar. It was completely useless. So
I'm guessing that we're going to see RIM open below 25 tomorrow, just based on kind of the way this thing is diving. It traded below 26 and it caught a little bit of bid and seems to be selling off again. It's going to be a rough one, folks.
Yeah, if you're short RIM downside, hold on to your horses. Hold your horses here, but yeah, we also have, speaking of massive sell-offs today in the old trading block, another name on the tech front, the old Widowmaker, struck again today. Netflix just getting the legs chopped out from under it today. This is a stock that was trading over $300 almost exactly 2 months ago, and this thing's closed today at $169.25, down nearly 40 handles or 19% today. This is the Widowmaker for a reason. This is a beast. Oh my God! This thing's down 40% in 2 months now. So a lot of people saying that maybe that pricing move wouldn't hurt them. Apparently, that's not the case. This thing is really... Well,
it's just when it rains, it pours. They missed the Stars deal. They missed this. They missed that. They're just terrible. They're the classic example of they were successful in spite of their management, and looks like that is coming to an end.
To give you some clue, there's so much volume you can't really break it down in Netflix, so we don't have it in the odd block. Not surprisingly, it was all bearish volume, and they usually do about 75,000 contracts. Lately, they did over 250,000 today, so a size day.
It was interesting in RIM. Almost every major order was a bearish put spread. The only two orders that weren't, basically a 27-22, 25-22, 27-25. Was a guy bought a bunch of the SEP32 calls, but I'm guessing he was just using those as a hedge against his short stock. And another guy sold the 22 puts in March. And I'm guessing that he was also just, he's got short stock and short puts against it. So basically every single trade was short RIM. And, it just goes to show you that you really don't argue with smart paper. If there are 40,000 contracts all buying puts, guess what you should do? Well, anything other than go out and sell.
Yeah, except being the market maker who has to stand in there and sell those to them.
Exactly. Although, I'll bet you market makers, if it sticks here at 27.40, market makers that sold, if it stays in at 26.40, market makers that sold to 27.22, 27.25 are going to be pretty happy campers, actually, assuming they're hedged.
Yeah, that's a big assumption, and also assuming that it stays here. Netflix has done anything but stay since it started, for the last year or so. I think.
There you have it, market makers. You heard it from Mark Longo. Start shorting the rest of your deltas now.
Yes, definitely overhedged to the downside. And speaking of downside, UBS taking on the chin today as well as yet another rogue, quote-unquote rogue trader. Cost them about $2 billion today. I'm not familiar exactly with what he was doing. I'm imagining he probably, like everyone else, was just out there selling puts or something else, maybe selling straddles like Nick Leeson. I don't know. But yet another one. We'll have some of their paper flow in the odd block for UBS because it's a little surprising, I think. I'm looking at the article about it right now from Reuters. They have his picture from Facebook.
Yeah, what did the rogue trader do? My guess is he owned a ton of RIM.
Yeah, there you go. He was long 1 million upside calls in RIM. But yes, another rogue trader lighting up the tape. I love how they're all rogue traders now. Ever since Nick Leeson wrote that book, they're all
I know.
rogue traders.
I wrote a negative article on RIM one time, and every Canadian was like, "You're a jerk, eh? You jerk, eh?" That's what they kept saying to me via the type. It's interesting. I didn't know this, but Canadians actually write A when they're actually writing down things on paper too. I'm as surprised as you.
There go all of our listeners from the Great White North. All
yeah,
six
you
of
just heard every Canadian hang up.
And Mr. Tusaw, what were you watching in the commodities and metals? And Tim, you could dive into this one too. Let's dive into our commodity rundown for today.
Well, my beloved gold is coming down, but I mean, it's one that, folks,
Wait, it can do that? I didn't know it could do that. That wasn't in the contract I signed.
Well, oh my gosh, we got to work on the different contracts here. What about your little birds? What do they tell you about it?
I'm just getting back in the office this morning, so my birds are a little out of whack.
Oh, no wonder. Yeah, gold's had quite a run, and folks, I think it's time for a pullback in gold. So we're pretty tight. We tightened up our hedges a little bit in gold recently. So don't get me wrong, I still stand by my long-term bullish view on it, but short-term, it might be a little bit of a bumpy ride. So we're tight. We tightened up our hedges a little bit on it today. We're long the 170 puts. We're short the 185 calls, but nonetheless, that's still pretty tight hedge for us right now. And if gold were to go down to, let's say it gapped down to 165 tomorrow, and I'm making reference to GLD, I don't know if I would necessarily be too quick to roll it down like usual. So be careful with the precious metals, at least for the short term.
Yeah, if only somebody had listened to some brilliant guy on the option block that said gold was a huge sale when GVZ hit 35, then everybody listening here would be so much better off. Boy, if only there was somebody that smart. Unbelievable.
And Mr. T-Knob, any other commodities you were watching today?
The other commodities, heating oil was up pretty big today. Of course, it's freezing here in Chicago, so that's probably why. But a lot of the other softs were pretty negative. Cotton was down pretty big. Sugar was down again pretty big. Soybeans were down. Corn was down. So a lot of the commodities were hit today. There was, I think, some paper money flowing around, and everyone wanted some of that. So that's where they went.
Speaking of money flows, let's close out the old trading block and roll right into the odd block.
The odd block.
And welcome to the Odd Block. This is indeed the portion of the show where we talk about the interesting and or the unusual paper that is lighting up the options tape and the options market today. And we're going to kick things off with the name we touched on in the trading block, good old UBS. Not surprisingly, they were down substantially today. They closed at $11.41, down $1.27 or 10% today. And this is the name that does about 1,400 contracts a day. They did over 30,000 today. And as we said earlier, they uncovered a quote-unquote rogue trader in their ranks. They're saying their losses could be upwards of $2 billion through all these unauthorized trades that this trader was putting on. And
what do you think are the odds that it was actually a rogue trade, or that?
I was wondering that myself as I was reading this. He's like, maybe they just got caught putting something on, and they hung this guy out to dry. Who knows? I don't know the details of what he was trading. I don't know if he was just shorting a bunch of premium and it came back to bite him. That's what a lot of times these guys are doing. The SocGen guy, he was doing index arb without the other leg. He was just doing fake. He made up the other leg and was doing a naked, unhedged arb essentially, and it blew up in his face, which I think is hilarious. But this guy, I don't know exactly what he was doing. But if I had to bet, he was probably like, well, all the rest of them. It's usually something pretty simple, like shorting straddles for size or something else along those lines, like Nick Leeson did in Barings. And so the stock was off quite a bit today, and yet, not surprisingly, you think the bulk of the paper would be to the downside, picking up puts and whatnot, but we actually saw the opposite today. We saw a good chunk of the order flow looking pretty strong to the bullish side. A lot of people are expecting UBS to rebound fairly heavily, and they're lighting up the tape because of it. We saw about 3,100 of the OCC12 calls getting picked up early in the session for about 73 cents each. These are near-term upside calls right here. We also saw the DEES12 strike looking pretty popular with about 2,500 times as well. The bulk of those buys in the $1 to $1.10 range. We also saw sellers of the December 12 puts, about 1,400 of those opening up for about $1.65, and a total of nearly 6,000 of those going up on the day. A large portion of those being sales as well. We also saw sellers hitting the ACA 10, 11, and 12 puts. So rather decidedly across the board, a lot of people expecting UBS to bounce off this. You look at the chart, it's not entirely surprising. UBS was trading around $20 just back in May, and even last earnings at the end of July was trading nearly 18. It closed today at 11.41, so substantially down from that. I don't argue with a lot of this paper. I think it might not be a bad trade. I just don't know if I would do it so soon, given that so much of this is still unknown. They don't know how much of this thing really might cost them. And how often do we see these things initially announced and then it's much worse than they actually know? So I don't think I would naked do any of these legs. Any of you guys watching this one trade today, or any of you guys watch UBS?
I was watching. I saw the exact same thing as you. A lot of people buying, and in areas where you would have expected people to be buying puts or selling calls. A lot of call buying. When a decent company has kind of a one-time charge like this, a lot of time it gets overdone, and so that's probably what people are betting on. This isn't like a big structural problem with UBS, like their margins are screwy or this or that. This is literally the equivalent of taking a one-time charge for a restructuring or something like that. So if you base a company's value on its long-term profitability, then hey, maybe this isn't that big of a deal. $2 billion. What is that? What, a quarter? About 1/4 of what UBS makes usually. Is that really that much? Is my question.
Let's see. Yeah, they reported they're going to be unprofitable in the third quarter due to the $2 billion loss. They don't say exactly what they were. I don't have here what they were expecting in the quarter, but sounds like $2 billion was enough to gobble up whatever they were planning on making.
Right. Well, they were holding Greek bonds. That's what.
There we go. He was a huge bull on Greece. That was his undoing right there.
Yeah. Well, his uncle Papadopoulos told him buy Greek bonds, and he missed out. That's the thing is they don't tell you. His last name was actually. His name was George Papadopoulos, and that was why he bought all that Greek stuff.
Uncle Mike, what do you think of UBS here? You like a bullish risk reversal in UBS, or you just staying clear?
Staying clear for now.
You're no fun, sir. Party pooper Uncle Mike.
Tim Navabi, now what do you think? Maybe UBS, maybe that's Schwab's next pickup now that you guys now that they're with you guys. What do you think?
I didn't see anyone trading UBS today. I was pretty surprised. I didn't hear its name thrown around the office. I was pretty surprised myself. But yeah, I mean, I see what you guys are talking about, and we shall see.
All right, and closing out the odd block here, we have a nice little one, kind of what the odd block was conceived and designed about. This is a name Amerigroup Corp, ticker symbol AGP. They closed today at $44.37, up $1.24. It's a name that does 500 contracts a day. Usually they did 4,500 today. And what's really interesting about this is that we saw size opening buying of calls in this name, and they're buying in SEP calls. So these are essentially daily options at this point. So someone's coming in and picking up size calls with 1 day to go. We saw about 3,500 of the SEP 45s being purchased for the 25 to 35 cent range, and about 3,500 of those on previous open interest of just 72 contracts. We also saw an opening buyer of the SEP 44 calls for about 700 of those for about 55 cents or so. And like I said, these have 1 day to go. The stock was already up today, probably as a result of some of this buying activity. But this name AGP is going to be presenting at the company's analyst meeting tomorrow morning. So this person obviously expecting that meeting is going to go well because he's picked up a substantial amount of very, very near-term upside in AGP. So this guy essentially needs a pop above 45 tomorrow or these calls are going away. So interesting one to watch, and we'll have to keep an eye on AGP tomorrow, and listeners keep an eye on this one as well tomorrow to see if this person does indeed get his pop, because this seems to be very unusual paper. Let's just call it that. All right, you guys have anything else to add to this one before we dive into the Express block?
No, I'm just a little disappointed we don't have a $1 stock with 9,000 upside calls purchased.
Those are fun. This one's a close. This was a $44 stock. It's a little more legitimate, but
I know that's what I'm annoyed about. Where's my $7 stock where some guy bought 90,000 calls for 15 cents?
I'll put the order in for one of those for Monday's show. How about that?
YRCW. I think that's we get that one a lot.
Oh, they did some paper today.
Options.
They did 27. They did 27,000 SEP half puts. 0.5 today.
Mark, we've got it, Mark. I think we've got to buy the Jan 2014 50-cent calls for 6 cents.
I want to sell the SEP half puts for 33 cents with a day to go.
Unbelievable.
What is this? This thing is crazy. Look at this. 27,000 of these YRCW SEP 50-cent puts went up today. This is nuts.
I get a lot of people just selling puts, trying to. I don't know. What's
for 30 cents.
What's wrong?
For 30 cents is not much of a flyer to take on the 50-cent put. Wow, look at that.
No, they're selling like $6 puts. They want to sell like any put. They're like, I thought it was guaranteed, man. What's going on?
That's a little different. Well, there you go, Sebastian. There's your nonsense name for the day.
It's like, why would you spend 6 cents on a call when you could buy the stock for 30 cents?
I know. I love that. I love that. That continually eludes me. Yet people do it. It cracks me up.
It's hilarious.
All right. And with that truly unusual name to close it up, we're going to roll right into the Express block.
The Express block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Express block. This is indeed the portion of the show where Tim Navabi takes the reins. And as you alluded to in the odd block, sir, I imagine the Widowmaker was taking up quite a bit of your phone time today.
Yes, sure was. A lot of people just, they don't know risk. They don't understand it, or they don't think it will affect them. And Today they learned. Last Friday too. That was not another good day. So yeah, a lot of calls on risk. A lot of people that were short puts, naked or spreads. They more than one has told me, I did so well selling puts for so long.
Really? In Netflix? This thing would move 20 handles at a clip. Granted, the net movement was to the upside, but it wasn't straight up. It dropped 20 handles at a clip many times over that course of that run. If you didn't learn, if any stock was illuminating over the past year the danger of just naked put selling without any sort of other hedge, I think Netflix was a great example. They don't call it the Widowmaker for nothing.
Yeah, it was ugly. It's some of the other things that we were getting calls on today are, expiration tomorrow. The September futures, last time to trade that is at 8:30 in the morning. It's not in the afternoon. And, a lot of people with spreads, deep in the money put spreads wanting to roll, thinking they're going to get a credit. Other calls were, what's my risk? I have a put spread on. I have a call spread on. What do I need to happen? One of my favorites, though, and this one I really like to talk to people about is, they will own a leap and they'll be short something that's, right at the money or slightly in the money for the front month. And they'll say, okay, what's going to happen on Monday? If the stock goes in the money, will I have the stock if it's, if I'm short calls? I say, yeah, your account will be short stock. Well, what if I can't afford it? What am I going to do? Stock has to be bought back, especially in an IRA. I always try to tell them, just, you can make it real simple. Roll the option on Friday. The best way not to have the stock on Monday, don't be in the option that's going to expire in the money. Some people do take that advice and they're happy about it. And, some people don't, and they have a headache on Monday. They were out to trade options and now they're trading stock on Monday and their, balance page doesn't look very good. So I think the biggest thing I can tell people is, if that's your strategy, just don't hold the option going into the weekend in the money. That's the biggest piece of advice I can give.
All right. Thank you for that, Mr. Tnov. And good luck tomorrow on expiration. I'm sure you guys will have another busy one with rim down heavy, and who knows what's going to happen in the Widowmaker tomorrow. If it'll be up 20 handles, down 20 handles. Who knows? But rim looking even more ugly as we talk. It's down. It's trading 24.5 now, so it's down another couple points. Lovely. Hope they took my short delta advice earlier in the show, which of course comes out tomorrow when it's far too late for you. All right, and with that, we're going to close out the old Express block and roll right into the strategy block.
The strategy block.
And welcome to the strategy block. This is, of course, the portion of the show where the man from the mountains himself, good old Uncle Mike Tusaw, illuminates us on some in-depth option strategy or tidbit or trick. So, Uncle Mike, what do you have in your quiver for us, in your toolbox, indeed, for today?
In the quiver toolbox of strategies, tidbits, and tricks today, but there's a lot of words.
There's a lot going on
there. You were
there.
an English major, weren't you, Mark?
I was not. I was a chemical engineer. Then I was lured to the dark side, and I majored in derivatives and finance, essentially, for the rest of it. So.
Yeah, you must have done well in your English classes. You're never short of words, that's for sure.
I have done a wee bit of writing in my day.
we ain't learned none of that good English in the mountains here, but anyway. For today, twofold on the strategy block. First one, I'd like to revisit something that we've talked about in the past that I think is important to talk about going into expiration to kind of add on to what Tim was saying. A few months ago, I got a Christmas put with Visa, and we were collaring Visa. And what had happened was we were rolling up a collar, and I had I had a put option that was still on, and the put option was worth a penny. And I was long the put option. So because of the fact that it was just a penny, in the situation I was in, it didn't make sense to close out the option because it would have literally cost the client money to get out of the option. So I just was going to let it expire worthless. So with that, what had then happened was there was an announcement and Visa went down probably about $10 or $15 the following day. And so naturally that penny option that I had became worth several dollars. And it was basically the technical term for such a thing on my end is luck. Now, unfortunately, the person that was on the other side of that trade that was short the put, that was planning on letting it expire worthless, all of a sudden, because they were too cheap to close out of the 1 cent put and didn't want to pay the commission, they are now all of a sudden stuck paying me the several dollars because of the fact that I was actually in that put. It goes back to the saying that, well, the market went down 40% in 2008, and I sold puts, but who could have possibly predicted the market going down 40%? And then the answer to that question is the person who bought those puts. So the point is that if you're not ready to hold the stock and you're short a put, maybe you want to close out those penny options. The other reason I bring that up is that right now, similar situation with gold. Gold had made a run up, and so what we did is we rolled up the collar, and right now I'm long a September 165 put, and I think maybe that's at 2 cents right now, but either way, it's not making sense to close out that position right now. So if for some reason GLD goes down $20 tomorrow, there's going to be a lot of people getting some Christmas puts in gold. So understand that there's someone on the other side of the trade. Now, the other thing that I want to talk about today is that of a ratio spread. Recently, they're really getting into ratio spreads. Someone that I know that was doing some ratio spreads on futures, and they would go long a call option and then sell 2 call options out of the money and think, wow, this is pretty much a free trade. This is pretty good because of the fact that you would have the 2 naked options financing the cost of the original call option. Now, don't get me wrong, I love the ratio spread, and it's probably one of my favorite things to do, but you need to kind of have an understanding of it. Oftentimes, if you're doing a ratio spread for even money, it's going to be a negative delta. So that means that if the stock goes higher or the future goes higher, or whatever the case may be, the spread itself might actually go against you for the time being. Now, on an expiration day risk graph, don't get me wrong, it's going to be positive deltas, but you're going to have to wait until some time decay goes away until you get those positive deltas. So the moral to the story, whether you're doing a ratio spread, a calendar spread, a bull call spread, a bear call spread, a bull put spread, whatever the case may be, look at your position delta on your Options Express account. If you're in the positions page and you click on Greeks, you'll see what your actual position delta is. So that way you'll get an idea of what your real position actually is instead of just having the assumption as to what your expiration day position is. And that is today's strategy block.
And that's one to grow on from Uncle Mike Tusaw, the man from the mountains. And now, sir, you can return back from whence you came until we call from you again, until the Tusaw signal appears in the air and we summon you once again.
It's like the bat signal, except you have 2 saws up in the air. That's what I see.
Yeah, I think it's a hand around the neck of a grizzly bear is the Tusaw signal. And now we're going to close out this episode's strategy block and roll right into Around the Block.
Around the Block.
And welcome to Around the Block. This is indeed the portion of the show where we talk about what might be lighting up the tape, what might be moving the markets in the next few sessions until Monday's show. And one last update on RIM here. They're hovering around 24.5, 24.60 now. So it looks like maybe the worst of the downside is over. We shall see in RIM. But
yeah, I mean, at least until all the traders that left come in tomorrow morning and start selling this sucker again.
Wait a minute. Whoa. Short. Or until the Canadians say this is a buying opportunity. Let's light this candle.
Oh, yeah. They're going to go, oh, bye.
Hey, they got all that oil sand money and all that timber and resources money and gold money. They can just dump it right into RIM. Keep it afloat. RIM will be the new Bre-X. That's an old reference for
Bre-X.
Those of you who remember the Canadian gold scandal company from probably about 10 years ago. Look it up, listeners. Bre-X. It was a fun one. All right. But yeah, in terms of what might be lighting up the tape next week, kind of the usual suspects. We have still, even though the market rallied today off of all these banks funneling money and pumping money into the European banking system, there still are some lingering concerns about what is going to happen with Greece going forward. That's still the big question. That's still the million-dollar question, which gives us still a lot of opportunity for potential weekend risk this week. So yet another weekend where you probably don't want to go home short a ton of downside unless you have some hedges on. And of course, Tim Navabi's big concern tomorrow, expiration. That will be everyone's big concern as we wrap up all of this frenetic month of trading. Tim Navabi, you coming in early tomorrow?
Yeah, I will be here early. It's a very special expiration, of course. So yeah, definitely it'll be a busy day tomorrow.
So you heard it here, listeners. If you want to get your trades off early, call Tim. He'll be in the office around 4:30 a.m. Is that how it starts?
And what makes it a very special expiration as opposed to a
well, there's only 4 of them. There's only 4 of them this year.
Quadruple witching.
Every year.
Quadruple witching. Is that what you mean?
Quadruple witching. Right.
Yeah.
It really doesn't mean too much, I think, right? I mean, it doesn't really mean too much like it used to.
Well, I mean, it matters a lot more on the future side. Like big SPX traders, it matters because you've got all this rolling. You see a lot of screwy stuff as guys try to unwind their kind of set positions into all sorts of different things. So.
Yeah. And Michigan sentiment tomorrow.
Yeah, Michigan sentiment. That's about it.
My Michigan sentiment is that they were lucky to beat Notre Dame last week.
All right, and Uncle Mike, what are you watching for the week ahead here?
I just laser focused on the 1200 mark on the SPX. We closed above it today, and just curious to see what's going to happen going forward. We might have to get one of our imaginary 50% guarantee short strangles going again between 1150 and 1250 and see how it goes.
Yeah, I don't think 1200 it really has any magic anymore, given that we blow through it with such frequency in both directions, to the upside and the downside. So and maybe as a fulcrum of that strangle, it might make some sense, but as a support and/or resistance, I don't think it really does much anymore. And of course, Greece expiration tomorrow. We have RIM earnings today. Those are some of the bigger earnings we've been watching for a while. Not too much else lighting up the tape on the earnings front. And
Oracle next week, I think, right? Oracle.
Is Oracle next week?
Yeah, Oracle's next week.
Well, there we go. Everyone loves a good Oracle.
Yeah, all those.
Oh, Adobe, don't forget to update your Flash player.
Nike, Bed Bath Beyond,
all that stuff that's moving the tape. All right, so listeners, keep your powder dry going into the weekend because, like we've seen numerous times in this market, anything could happen over the weekend. Anyone could buy anyone else. Anyone could default. Anyone could be downgraded. Rogue trader could strike again. Who knows? So I think it's definitely a good time to have some net units and to play it safe. And so that's going to do it for this episode of the Option Block. I want to thank all of my partners in crime for coming on the show today, and starting off with you, Uncle Mike Tusaw, the man of two saws. What is coming up at Know Your Options Inc., sir?
Strike price selection this Sunday night. Do I buy in the money, at the money, or out of the money? This is always, for many years, has been our most popular webinar. It's been the most popular topic that I've ever spoken about in my entire career. So stop on by, knowyouroptionsinc.com, Sunday night at 8:30 p.m. Central Time.
Wait a minute, you're telling me these webinars are more popular than your series of jazz flute webinars from the late 90s?
Well, the kazoo ones are actually in first place. A lot of people don't know that the kazoo actually worked a little bit better than the flute. But
that was blues kazoo, correct me, right? And jazz flute?
No, Mark, it was the opposite.
Jazz kazoo. Interesting. I need to download that one again.
Blues flute. I played the blues on the flute. Who else can do that?
You, sir, are an impressive specimen. All right, thank you for that. Uncle Mike, you can indeed return to the mountains now. And good old Mr. Seabass, what is coming up at Know Your Options Inc., sir?
On October 21st in Chicago, myself and Jeff Quinto are going to be presenting an all-day seminar on trading futures options and futures in tandem. It's a really great course. Go to optionpit.com/events. If you are a listener to Option Insider Radio, the price of $8.95 will be discounted to $3.95. prior to October 1st. So I would strongly suggest signing up for that.
Speaking of in-person events, I have forgotten, I've neglected to mention that we will be doing another live option block coming up not that long from now, about a little less than a month, at the Futures Industry Association Expo here in Chicago on October 11th at 4 p.m. We will be recording live and also videotaping it. So if you are going to make it to Expo, or if you're in Chicago, you can just swing on down to the it's at the Hilton on the south side there on South Michigan Avenue, and usually they can give you an exhibit hall pass for free. We will be recording on the FIA stage there in the exhibit hall, so be sure to swing by around 4 p.m. It's also a great exhibit hall show if you just want to go pick up some tchotchkes. You name it, they have it to give out down there. So by all means, swing on down to the Futures Industry Association Expo. There's a lot of option stuff going on down there, as well as us recording live along with Vol Views, and we'll also be doing the long and short of futures options, all live from the FIA stage next month. So look forward to that, listeners. And before we go, Mr. T-Knob, what is coming up at Options Express, sir?
Unfortunately, I don't have anything to say here. No live events, no live webinars.
They need to give you a rundown list before you come on, Tim, so they could prep you for what's coming up at OX. So you heard it from Tim Navabi. Nothing coming up from Options Express this week, so keep your powder dry and don't watch any webinars. Maybe watch some football this weekend instead. All right, that's going to do it for this episode of the Option Block. I want to thank all of our listeners out there for downloading and streaming and subscribing to this show and making it such a success. And don't forget our live shows coming up on October 11th and 12th right here in Chicago down at the Hilton at the FIA Expo. And keep your powder dry this weekend, and we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.